And welcome to the investor call of Cigniti Technologies Limited to discuss the Q4FY20 results. We have with us today from the management, Mr. Srikanth Chekkilam, Chief Executive Officer and Non-Executive Director, and Mr. Krishnan Venkatachari, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Snighter Albuquerque from Ad Factors. Thank you, and over to you, sir.
Thank you, Stephen. Good afternoon, everyone. Before we start the call, I'd like to point out that certain statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. The investor call may contain forward-looking statements based on currently held beliefs and assumptions of the management of the company, which are expressed in good faith and, in their opinion, reasonable. Forward-looking statements involve known and unknown risks, uncertainties, and other factors may cause the actual results, financial conditions, performance, or achievements of the company or industry results to differ materially from the financial result, condition, performance, or achievements expressed or implied by such forward-looking statements. The risk and uncertainties relating to these statements include, but are not limited to, risks and risk expansion plans. Benefits from fluctuation in our earnings, our ability to manage growth and implement strategies, competition in our business, including those factors which may affect our cost advantage, wage increase in India, ability to attract and retain highly skilled professionals, and ability to win new contracts, change in technology, ability of financing, and ability to successfully complete and integrate our expansion plans, liabilities, political stability, and general economic conditions affecting our industry unless otherwise indicated. The information is preliminary indicative and is based on management information, current plans, and estimates. I would now like to hand over the conference over to Mr. Srikanth Chekkilam for his opening remarks. Thank you, and over to you, sir.
Thank you, Snighter. Good afternoon, everyone. I hope all of you are healthy and safe. So welcome to the earnings call. Just to give you a quick glimpse of the numbers from Q4, we have grown from USD 30.91 to USD 32.27, which is a 4.4% growth. And in rupee terms, we have grown at about 7.5% when you compare Q3 and Q4. EBITDA for the quarter also has gone up slightly, which is about 13.5% from Q3, and for the year we are at about 15.8%. So the total new accounts that we added in Q4 were 18, and one of them is a Fortune 500 company in the utility sector space. And the other accounts are mostly ranging from medical devices to insurance, cybersecurity, and ISVs. From a business standpoint, we had gained tremendous momentum and traction with many of our accounts in the months of February and March before eventually getting stalled with the coronavirus impact. The company has quickly adapted to the COVID situation and has made work from home operation in a short period of time. And almost the entire workforce, I would say 99%, is working from home. One of the things that COVID has brought out is that the teams are working in a much more coordinated manner. Silos have reduced. The executive management connects almost on a daily basis. The productivity levels seem to have gone up, and there has been no escalations or productivity from clients. So in the long run, we also believe that a hybrid model of work from home and working from office will evolve, and companies will have to compulsorily include measures for BCP on this front. I would like to thank the employees for quickly adapting to the situation and managing to complete the tasks quite effectively and also efficiently. I would also like to thank the government for letting us move infrastructure to employees on time, and we are thankful to the government for that. Coming to COVID-19, it certainly had an impact on our business, and I will address the coronavirus business impact for the company in two phases, both short-term and long-term. Just to summarize, a lot of companies in the short term are reprioritizing their cash, which is quite critical for them, and in essence, it has a trickling effect on companies like us. Companies are looking at every cost reduction opportunity and are quite non-committal on making decisions related to new businesses. However, the upside we see is that they are investing into digital channels that have not existed before. And also to maintain these digital channels and assets, they are investing quite a bit into security. And now, a lot of digital work having no boundaries, it gives an opportunity for a lot of work to be done remotely and in offshore, which sort of reduces pressure on visa issues and helps clients with cost advantages. I think in the long term, sectors that have not adopted digital technology in a big way will be forced to start that journey, and it is a huge opportunity for the IT sector as a whole. The key for companies like us is to make those investments now, and whoever executes that well, I think will be ahead in the race for long term. I will sort of expand this in the context of Cigniti, both short term and long term. I think many of you are aware we have a good exposure to travel, transport, and hospitality, and it has been a sweet spot for quite a while now. And our exposure to airlines, hotels, railways, cruise lines, restaurants, and the ancillary companies related to these industries have also been high compared to other industries. There has been a direct impact on some of these accounts, and work has been downsized, or we are partially billing. Specifically, some airline accounts have had a double whammy on both Boeing and coronavirus issues. And at the moment, like I mentioned earlier, some of these accounts are either downsized or only billing partially. Most of the critical projects are, the lights are still on, around security, testing and all that. We are, of course, in continuous touch with the management of these companies to understand their future roadmap. The cash positions of the companies that we are serving with is quite strong at the moment. But there are uncertainties around the habits and nature of travel. At the moment, our understanding is that travel habits will change and companies will need to adapt to this reality quickly. Travel, transport, and hospitality industry will operate inefficiently for some more time, and safety costs of those companies will go up. No contact business interactions are on the rise, and whatever little human interaction was present for business purposes will be pushed entirely into the digital world, and this, I think, is an opportunity for Cigniti. We believe our good standing with these clients and past investments into digital assets and the automation and the Blue Swan implementations that we have done would be helpful to gain wallet share at these companies. Many of our accounts, we were able to retain our teams in spite of the COVID crisis, especially at the travel, transport, and hospitality accounts. We were able to retain our teams while the clients had to unfortunately let go of some of their own. There has also been impact on industries like event management and non-essential retail in the US. And as the US economy is opening up, some of these companies are limping their way back up. Again, consumer habits are evolving in the space, and we're not exactly sure of the metamorphosis. Event management is evolving digitally, and in the long run, the role of augmented reality, virtual reality could possibly be on the rise, with a hybrid model of event viewing coming out as the norm. When it comes to retail, retail has already embraced e-commerce quite well in the past. But I think the way delivery of retail will be done will evolve, and I think drone-based delivery is expected to be on the rise, as well as in the sector as a whole. and opportunity for quality assurance and engineering in this space will be tremendous. Coming to the implications for the short-term circumstances, I think we will see stress on pricing. I think that is to be expected for some time, and possible delays in receivables may also be prevalent. We as a company are also shifting to either receiving upfront payments or outcome and milestone-based deliverables for higher pricing with some of our clients. Utilization levels should probably see a drop in the next 2 quarters as well, and the bench that we have is being repurposed or being upskilled wherever possible. We have also taken a 5% pay cut that has been enforced across all levels in the company, and increments have been temporarily deferred. Cost control measures have been key, and we are being prudent in deploying cash and only making investments that are relevant to growth. Obviously, at this juncture, we expect internal travel costs to come down quite significantly, and also making a lot of savings on capex. I think in all we have effected savings of about $8 million on committed costs for the year. Having said all of this, we've also had some good news. We managed to add 5 new clients in this quarter, even at the peak of COVID crisis in both US and UK. Again, all through digital touch points. And we have a good medical devices story already that is existing, and we have added 1 new logo in that space in this quarter. It is one of the largest pharma companies in the world who have recently released rapid testing kits. The total number of accounts in the medical devices space at this point is 7, and we possibly will add a few more in the upcoming quarters. We are expanding our presence in the 5G and network space, which is also a growing technology, and a lot of investments and spend is happening in that space. We have promised for one of our accounts to grow into a large one in the coming quarters again. And of course, we work with one of the largest retailers in the world, and they have been very busy in this COVID crisis. And they have a lot of requirements that need to be ramped up in the existing and future quarters. So we are focusing a lot of energies to mine that account as well. Looking forward, I think government will also be a big spender in the years to come, and we are making all efforts to be in the first row of such opportunities. We have partnered with a few government-focused companies in the US, specifically out of Baltimore and Virginia, to try and service some of the accounts. I think in the long term, companies will have no choice but to go entirely digital. I mean, we have seen very, very small companies who are barely technical in nature adopt digital collaboration technologies. And I think this is only a beginning. I think we also believe that IT spend will go up quite significantly in the future for many companies as they embark on their technology ambitions. I think we are well poised to capitalize on this digital push as we are already doing some cutting edge work in this space. We continue to invest into our IP Blue Swan. We are working on evolving a task-based automation platform, which I think will give significant savings to many of our clients. We will continue to invest into growing areas such as cyber security, and we have identified a few startups and partners in these areas. Some other areas that we think will, boom quite significantly, especially when people are trying to get this vaccine out for the COVID situation, is blockchain. Again, there we have partnered with companies, a few of the companies in the US, and we've already taken these solutions out to our clients. And then we also are investing in the areas of cybersecurity, cloud migration, and data modeling. And we are also partnering with specific domain-based startups in the areas of banking and healthcare, specifically AI and digital banking, where we already have clients. We work with one of the world's largest, one of the first and largest digital-only banks. So that gives us a bit of a head start when it comes to digital banking. And we're also working with hospital-based healthcare platforms where a lot of spend is happening right now. In the long run, I think we intend to be assurance partners for most of our clients and also new clients, and we look forward to offering services around the areas that I mentioned. And we want to use this opportunity to invest into growth areas. So with this, I will hand it over to Krishnan to specifically talk about numbers. I just gave a brief glimpse in the beginning of the call, but I just wanted to focus on the coronavirus impact and how we are faring in that scenario. But for the specifics, I'd like Krishnan to take over.
Thank you, Srikanth. Good afternoon, gentlemen. Wishing you all a safe stay. I'm sure all of you would have received investor presentation and would have got some time to run through it. In brief, in terms of the number, I think the quarter has been very good for us, and we have pumped in terms of a lot of efforts which has been done over the last couple of quarters have resulted. And with the boom time to take over in the coming year, probably I think all of us, India and the whole economy in the world is struck over the pandemic, of course, which this will also pass through and we will emerge victorious. We have done in Q4 about 233 crores as against 216 crores. But for overall, for the year, if you look at it on dollar terms, we have done about 5% and the growth on the revenue, and year over year we have done about on the rupee term about 7%. While it is so the bottom line in terms of the, I'm sure that all of you will be looking through the numbers in terms of what it is on a comparable basis. But I think last year we had a software export incentive which was accounted for all the earlier years of 2015 till the last year, which is coming through. After eliminating all that out on neutralized basis, if you look through my adjusted EPS in terms of eliminating the export incentive and the one-time tax reversals all put together, I've remained more or less on an enhanced revenue also. My margins, PAT margin have remained the same, and my adjusted EPS is at least a rupee more. In terms of the analysis for the overall scheme of things, just for the number, we have done about close to 123.63 million in terms of the US dollars. My top 20 accounts have contributed about close to 47% of the revenue. The rest has come from the balance accounts. So total account service during the year has been at about close to 248 accounts. The on-site offshore mix in terms of resource mix has remained at about 38% and 62%, offshore being 62, on-site 38. And this is more or less flat comparing to the previous years, and the revenue mix also offshore at about 38% and on-site at about 62%. This quarter has been pretty good. Basically, we have yielded for this quarter at about $71 on the on-site, but average billing for the whole year has been at about $70. And also the average billing for the whole year on offshore has been at about $22, but for the quarter we yielded at about 23.2 to be more specific in terms of what we have done. We have managed to keep the receivables under control. I think we have about close to 67, 68 days in terms of receivable. A couple of measures which we have taken in terms of the preempting in March very clearly is that when this COVID started, of course, COVID had its impact on customers. About close to 20% of the customers have come back and asked for extension of the receivable days, ranging from 15 days to 30 days to 45 days max. From the original agreed rate of 30 days, 45 days, 60 days time. With that being the scenario, we have gone ahead and secured the company in terms of a receivable insurance and predominantly on the 85% revenue which comes from US and Canada, which we have taken up and covered it up under the receivable insurance, which covers any kind of eventuality. There has been a lot of the EBITDA in terms of dropping down by about a couple of basis points or 1.5 basis point. We have invested specifically with certain partnered relationship with agencies like Zeno, ISC and Forrester, and a lot of other events were planned. The committed cost which went through, and that is one of the reasons. And then we have started hiring a key set of salespeople and training in the sales team to yield better results, which yielded as we see the revenue in dollar terms and rupee term for the March quarter has been at about 32.27. More specifically for the month of March, we have done at about 11.3 million, which translates to a run rate of 135 million plus mining. We would have been hitting at about 150 if not the COVID has impacted us. The cash flow which has been free cash flow generated out from the system has been at about 90 crores. We don't have any long-term debt. We have still the US-based working capital, which is marginally utilized. Of course, India, we have the limit without any securities, backed by just some nominal deposits from Federal Bank, and used over the month end basically to keep the limits alive, and sitting pretty on mutual funds and cash equivalents to a tune of about 130 crores as of the balance sheet date. And we are poised to move on from here. As Srikanth said, that the total cost-cutting measures have already been put as a mechanism in place by third week of March. So we are keenly observing the market, we are keenly observing the environment, we are keenly observing and having dialogues with our clients on all fronts. One, business front, while the loss in the sector comes down, and we are trying to move around to the other sectors and our preparedness, and there has been a continuous set of interactions both internally and externally for us to really look through. So we are trying to conserve cash, we are trying to get the resources out, and at the same time we are trying to see that how best we can press our resources back into business in terms of moving ahead. I think with these few words, I'll just open the forum out for the question and answer sessions, and then we'll move on from here.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Shashikant from Dalal Street Investment. Please go ahead.
Good morning, good afternoon, sir. I just wanted to know whether do you have any exposure to travel and tourism industry, and if that is so, what is the percentage of revenue that you draw from there, and how do you find this changing after this COVID-19? Thanks.
Srikanth, I'll take this question. 27% is a contribution from the travel and tourism, entertainment, hospitality, and hotel industry all put together for us basically. But I think this needs to be split up into pure travel, pure entertainment, pure hospitality and hotels very clearly if you look at it that way. Yes, we have been affected on that count very clearly by the airlines asking us to pass the billing for about a quarter or so. But I think in terms of the businesses, what we are trying to do invariably is that we are handling the critical applications invariably, and while doing the critical applications, they did definitely have hold on to us in terms of asking us to look at, to see ways and means to optimize the existing resources. But in terms of acceleration for the new businesses or whatever it is, we'll have to wait and see what is happening around. But I will leave this now to Srikanth basically to move forward and answer in terms of how we are trying to cover up this in terms of the other sectors, which is our focus area now clearly.
So I answered this question in the opening remarks. So we have exposure to TTH, but having said that, the opportunity is that clients are also looking at cost advantages, and they are also trying to consolidate business from a lot of vendors to a few vendors. So, like Krishnan mentioned, we have not lost any of the airline accounts or travel and transport accounts. They have either downsized the accounts or we are only working in the critical applications. But having said that, the opportunity is to consolidate a lot of vendors into one, and that still leaves a lot of room for growth and opportunity to grow in those accounts. The other part is that, like I mentioned in my remarks, we are investing into areas related to healthcare, which is also quite significant for our company. We have about today 12-13% of exposure to healthcare. and that is growing. So we have a lot of medical device testing that we do. 7 accounts that we already have, and we are adding a few more in this quarter. So growth is happening on the accounts in terms of healthcare, in cybersecurity, in utilities, where a lot of assets are being pushed into the digital world. So we are seeing growth in those areas, and we already have cases and case studies to leverage and grow. It's not like we have to start from scratch.
While we expect that Q1, just to add a point, is that while we expect that Q1 will have a deferrals, basically, I think the entire world over is commencing probably from Q2. And with that coming through invariably more and more translation, where now any industry for that matter invariably will start focusing up in terms of tightening their purse and moving the money into the digital world, where we are geared up and we are very confident that we'll be able to get over that. But yes, there is a temporary blip, and we agree to this, that there is an exposure.
Can you give us any quantification on how much dent that you will have in terms of revenue for the Q1 FY21? And
I can't.
Okay.
Sorry. Yeah, please go ahead.
Yeah, and how much that will be covered by the other areas where you are planning, such as healthcare and other?
In fact, I can put it this way, basically, that clients in the airlines industry to the tune of about close to $7 million have asked for a deferral of revenue very clearly. And in terms of ascertaining, basically, in what we are confident while we are making our efforts in terms of getting through, because including today, there are a lot of wins which is coming through for us in the other areas. But I would like to leave the forum now as it is in terms of not giving any guidance towards any of the quarterly numbers as it move out, basically, because the situation is dynamic and it is not the ideal state to go ahead and give any kind of a guidance. Yeah.
Okay, thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Virendra Verma from IBCAP Ventures. Please go ahead.
Good evening, sir. My question is primarily the way we have seen last 60 days the world is going through, and obviously lot of work is happening through online or maybe internet. So just wanted to understand because on the security aspect, because there has been a lot of concern over the last few months, especially if I take the example of Zoom. Globally there has been a lot of concern, but people are using that. So first question is, to what extent this security aspect is very linked to the Cigniti business?
Shrikant, would you like to take this up?
So security testing as a practice, it contributes to about 7-8% of our business today. And in the current scenario, I think it will grow much faster than what it has seen earlier. So we do various kinds of security testing, right from pen tests to much more deeper areas of security testing. Now we are sort of partnering with companies that have deeper expertise who are security consultants to take them out to our clients. And I think that has a lot of weight in the current market scenario, where, like you have given examples of Zoom and also some companies that were held for ransomware. So I think there will be a lot of boom in that area, no doubt about it.
But what is your experience? Like you say, you're partnering with some of the consultants in this, but what has been your global experience, like not only for Cigniti, but other competitors or the players like you? What has been the trend, if I say, which are very 60 days will be very too early, but what are the sense you are getting? Like on the face value, it looks very positive, optimistic scenario for security players like you.
Sorry, I lost you in the last part. What did you say?
No, means because see, like as you mentioned that like there is a news revenue stream or the additional business could come from the security aspect. But if I look at last 30 to 60 days, what kind of feelers, I'll put it this way, you are getting?
See, I mean, some of the airlines today, they have stopped all applications except security testing, security related work and security testing. So that is the importance being currently given to the areas of security testing. If you just take airlines, which is the most affected, and if you talk about companies like Zoom, while their market cap has gone up significantly, just one instance of a person hacking into somebody else's Zoom meeting eroded billions of dollars of market cap in just one day. So the implication is very high, and we have immediately started campaigns around security testing, specifically around ethical hacking, code checks, then zero-day vulnerability checks, then structured testing around security testing. We have partnered with a few testing specific tool companies, and we also want to go slightly deeper than what we have to offer, because there's a huge opportunity right now, and when we pitch it to clients right now, that is the area where they're most willing to listen to. So that is what I mentioned when I said when we partnered with consultants and tool-specific companies to take our expertise, comprehensively take this expertise to those clients and offer this as a package.
Okay, sir. Thank you.
Thank you. The next question is from the line of Viraj Mehra from Equirus. Please go ahead.
Yeah, hello, sir. Sir, can you once again talk about the balance sheet where you said you have mutual funds? How much mutual funds do we have?
We have cash and cash equivalents, in the sense cash deposits all put together about close to 131 crores. Out of which bulk of it is sitting with fixed deposits, and mutual funds will be to the tune of about 20 crores.
Because I was unable to find that in last year's balance sheet. That's why I was asking. Sir,
I can share with you, the latest balance sheet has been published out, where we can even share the schedule with you very clearly. It's 131 crores.
Okay. And sir, out of the 20 crore with mutual funds, have any of our funds taken a hit because a lot of debt funds have taken large hits in April, and 6 of the debt funds have been closed. Are we present in any of those?
We are not present. We have not done any investments in debt funds. We have done only investments in liquid funds, ultra short and liquid. And we have not taken any exposure in any of the debt funds, and none of the funds which had closed, we never have any exposures at all.
Okay. Sir, given the situation that we are currently, how do you see the productivity of the employees? Have you seen any improvement in the productivity of the employees, and how do you kind of measure that? And how does then the billing happen for the same? Are the process still the same as it was when everybody was working out of office, or have some of these processes also evolved over last 1 month?
Shrikant, I'll take this question. Gentlemen, it's a good question probably. The productivity, in fact, in real terms, I think it's more than 8.5 hours working has moved up for everyone, working from home. That's the reality, because the commute is stopped, and the worries of getting back or whatever it is stopped. I think the deliverables have moved out. For that matter, we have not lost any kind of a billing, say from March 15th, tentatively, people have been there on the work from home schedule. So the whole of 2 weeks of March and the whole of 4 weeks of April, we have not seen any kind of client rejections in terms of the deliverables or in terms of non-performance issues or whatever it is. It has been fantastic. One. To answer the question, we have measured performance previously also, and we have measured performance even now also. The process remains the same, except that we have now that every morning calls which the delivery managers have, and then they have their automated system and report which is created out clearly. The escalations are much faster addressed, and people respond much quicker, and then the deliverables will happen in a much accelerated form. two. We've also implemented Oracle, and people have started getting used to and adopting Oracle system from 1st April, so that the automation has become the key, and that is also helping us in a very big way. So we don't see any kind of a production loss, we don't see any efficiency loss, we don't see any kind of a bottleneck. Probably we can say that we are 99% efficacy we are operating.
Okay. So last two questions. One, what will be your utilization as of now? And what is your hiring plan for the year, if any?
If you look at it, the hiring has been frozen very clearly. The hiring can happen with respect to specialists if it is needed in the industry. And for offshore, my utilization as it stands today at about close to 78.5%. My on-site as it stands today, it is there at about close to 91%.
And do you see any room for margin improvement when your utilization at on-site level improves? Not in Q1 or Q2. I'm saying when the regular business, assuming it's a growing concern. Let's say, do you see we can go to 82, 85, 83, 84, 85% utilization?
There are two ways to look at it. One, with the current pandemic in place, I think it will be too early to comment in terms of the margins and the utilization clearly, while every company will be grappling out in terms of seeing what best can be done in terms of the utilization, whatever it is. We have taken a social cost clearly. We would like to carry the bench at least for some time clearly, because the current environment doesn't encourage basically, and also the government doesn't authorize for any kind of a quick separation. So invariably, it's too early to really go ahead and call that this is what is going to be my improvement in utilization or improvement in my efficiency. While the earnest for all of us have been to really get to win as many projects, and today there is no distinct difference between on-site to offshore, and we can perform from anywhere because it is only from home. And it only adds value add to the clients in terms of cost optimization. As Srikanth mentioned, we are trying to go to the client to say that clearly, look, we can go for a output-based delivery, or we can take control of your total operations and try to deliver this at an optimal cost. Something like, for example, so much of percentage reduction in your cost and your throughput increases by 20-30% or whatever it is. That's the kind of an approach we are doing. So at this stage, it could be too early, but I think it's a clear math that my utilization moves up, my margin also will move up, definitely.
Got it. And sir, with the rupee depreciation of 75, 76, 77 in that range, are clients coming back? I'm saying non-travel clients, which is around 73% of your revenue. Are any of them coming back to renegotiate the clients in billing, dollar billing on the downward side?
No, not for this reason, very clearly no. In fact, for this matter, basically in the overall scheme of things in the last 60 days or 45 days, not a single client has come back to us in terms of a reduction in terms of the billing rate. But if you look at my method of operation is that each and every overseas entity over there receives the order, signs the order, and so the billing is in dollars, the contract is in dollars, deliverables is in dollars. Invariably, they don't look at what India does to those entities. They only say very clearly that you will do this kind of a work from offshore. So that when they price in that offshore portion and leave it basically, say they don't come out and say very clearly that, okay, this is what is your variation. And for that matter, while dollar rupee has been working out favorable for India, I think the rest of the currencies, if you look through, has been there is a lull in that invariably. So none of the clients have come.
Right. And sir, we are essentially sitting on, as you said, 130, 140 crore kind of cash, right? But if we look at minority shareholders, essentially there has been no distribution of cash from the company since several years. And company has been doing well. Any thought process from the management to distribute any kind of cash, be it a buyback or a dividend? Because it is very counterintuitive that all the other companies in your sector, even the smaller ones, tend to be far more minority shareholder friendly in terms of distribution of profits.
Yeah, good question. Actually, we also would like to be more investor friendly clearly and move ahead and do this. But I think we are not an exception, and we are governed by the Companies Act. We have a carry forward as of 31st March 2020. We have a carry forward revenue loss in the books which was hit in 2017 March. Another 25 crores to be wiped out, which we hope to wipe out in the coming year. And board definitely has deliberated some discussions and initiated some papers on this, but I think they will take it up appropriately. But I will fall through with the surpluses available in the current year in terms of any declaration of dividend or anything, but I think it's up to the board to decide to move forward. While the mood and the thinking is absolutely positive, but I think we are governed and by the law. The law doesn't provide me to do that till I wipe out the revenue loss, which is about 25 crores.
No, which is fine, but which will happen like this month, right? It would have happened in April itself. So essentially going forward, you are saying that at least you will consider. That's in the realm of possibilities for sure.
Absolutely. Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical Investments. Please go ahead.
Sir, actually I'm new to your company, so I beg your indulgence. Sir, I wanted to understand, sir, that how much is the total testing business in your total revenue?
More than 95%. Yeah. More than 95% is testing.
So I'm hearing that testing is a dying business, and I mean 10 years back, almost a quarter of Infosys revenue used to be testing, and now it's in low single digits. So it's like a dying business. So I mean, is it true? And I mean, so are revenue sustainable?
Well, I've been hearing this even before I entered the business. So we have grown from that point onwards. The reality is, the proliferation of technology today is so fast and so huge that testing has become a boardroom discussion. I mentioned this so many times. The President of United States had to apologize to the entire country because healthcare.gov had failed. The latest Boeing crisis is due to a software glitch. So if somebody says it's a dying business, I don't think I agree with that viewpoint. And we have been growing. I mean, despite people saying all of this, we have been growing. But there are certain technologies that people need to adopt to. Old ways of testing will no longer work. You will have to be cutting edge. You will have to put automation first. You will have to get into, embed yourself into the DevOps piece. If you don't do that, then it's a dying business. But we as a company have been evolving according to the market needs and possibly ahead of the game. So that is a very generic statement in my opinion, that testing is a dying business. But if you don't evolve yourself, any business is a dying business.
Sure. So is it like, I mean, is it a vertical specific, like maybe in BFSI segment testing might be declining, but in other segments like in aerospace, etc., in healthcare, it might carry on. So is it like that, or I mean, overall, you think that testing is here to stay?
Sorry, I lost you in the last part. What was that?
So basically, I'm trying to understand that this automation in testing, is it vertical and industry-specific phenomena?
No, it is not. It is not vertical. Or...
Okay. Sir, and also, sir, which would be your closest peer in India?
Closest peer in India. See, we compete regularly with all the large SIs.
So I understand, sir, that there's one SQS software, some German company which has some entity here also. So are they your competitors? They are also in testing?
Well, I can't comment for them because I think they have been acquired by a company based out of Germany a few years ago, which I don't know if it is in testing. So I really can't comment on whether they are pure play or not.
No, so why I'm asking, sir, because our operating margins are around 15%, and so they are clocking around 19% consistently operating margins. So if we are in the same space, they are also in testing, we are also in testing. So I mean, then why this discrepancy in margins? And
well, I really can't answer that question because I don't have enough information on their balance sheet or numbers. But if I have something, I can definitely let you know.
And sir, also sir, since I'm new to the company, sir, so it will be very grateful if you can just shed some light that what exactly happened in FY17, that we had an operating loss also, and on top of that we had a huge write-off, I think, and we had a net loss and some exceptional item of 330 crore. So what exactly happened, and why, sir, shareholders shouldn't be bothered that it will not repeat?
Yeah, Shrikant, I'll take the question basically. Gentlemen, we have given a detailed explanation in the annual report of the relevant year in 2017, which I can take it offline through factors. I can mail you the details clearly for the sake of time. But in terms of a brief discussion, I just want to tell you is that while the operational law, while we evaluated the company in terms of the investments made towards the IP products businesses, and when Ind AS accounting has to be implemented in place, there was an evaluation done by an independent Big Four agency, and they made it very clear that the segment has not yielded any kind of revenue, and we need to do a definitive charge. While the charge related to the extra years have been brought in as a one-time extraordinary charge, the charge related to the relevant year was grouped in the P&L above the line. These reasons for you will see an operational loss and also the thing. In terms of further details and completely in terms of the breakup or whatever is needed, we have been time and again providing to all the investors, and I will definitely be doing that to you as well probably, and you can have that through AdFactors or through my mail ID. I will be able to give you. Second, in terms of repeating this further or whatever it is, I don't think that there is any chance anything to really get repeated as the way it goes, that in terms of the corporate governance, what we are trying to do in terms of following the right set of standards of accounting and methods, as suggested by as audited by EY and BDO as internal auditors. Two, we are charging off the R&D currently what we are making with a budget cap of not exceeding 5% of the total revenue, and it's being charged off in the year in which it is spent. Three, if you see my balance sheet basically post then from 2017 March, hardly I had a fixed assets of about 8 crores leaving the goodwill aside, and over a period of time I think I've added about 7-8 crores. So my balance sheet has got nothing really to come back and say that okay, I'm going to really carry something and trying to do something out. So there's no. I hope to answer.
Yeah. So thank you very much, and I'll rejoin the queue. Thank you.
Sure.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Tejpal Singh from Suruchi Investment. Please go ahead.
Hey. Hello.
Hello, yes.
Yeah. So my question, I've got one question. In the current scenario, companies across sector are looking for cost reduction basically. Saving costs and all. So with respect to that, are our big clients like big IT clients looking for vendor consolidation? Are we seeing that kind of clients? Wherein a particular client would be looking only for 2 or 3 big IT companies, IT vendors, instead of 6 to 7 vendors basically. Their work and all. And if that is true, then what is the opportunity that we look forward to? Like because we are one of the leading players. So that is, I just wanted to know what is the scope of business like with regards to the same.
So I lost your last part, but I will go ahead and answer the question. Are we seeing consolidation of vendors? It's a general question again, but in the varied list of clients that we have, we are seeing both wait and watch and also consolidation of vendors for cost optimization. And do we have the opportunity to win some of these big accounts? Yes, we do, because we have shown value, and we have shown value both in terms of output and in terms of cost. So we stand a good chance by merit when it comes to winning some of the new and existing clients through consolidation.
Okay. And have we lost some of the opportunities with regards to new business because of client delaying their decision to go with the contract?
So we haven't lost anything, but there are certain delays, like I mentioned earlier in my opening remarks, that people are just wait and watch mode. They're sort of delaying their decision making just to see how the whole COVID-19 plays out.
Okay. And that's it from my side, sir. Thank you.
Thank you. A reminder to the participants, to ask a question, may press star and 1 at this time. The next question is from the line of Keshav Garg from Counter Cyclical Investment. Please go ahead.
Sir, first of all, sir, your fourth quarter investor presentation has not been uploaded on BSC website. So please do something about it. And sir, secondly, sir, as things stand today, sir, quarter on quarter, sir, what kind of impact do you see on the top line and our margins?
I'm sorry. My audio was lost. Can you just repeat the question?
Sir, I'm saying that as things stand today, compared to the fourth quarter, sir, how is the first quarter looking in terms of top line and margins?
I'm sorry. I don't think I'll be able to discuss out very clearly in terms of any numbers. While we remain optimistic, I think we're not going to discuss any numbers.
Okay, sir. Fair enough. And sir, I just missed out, sir, this travel, tourism, entertainment and hospitality, sir, altogether basically the most impacted sectors from COVID. Sir, what percentage do they constitute out of our total turnover?
As it stands, 27%, out of which core travel alone will translate to about 11%.
Okay. And sir, from this space, sir, so is it fair to say that at least 25% broadly kind of hit, I mean ballpark for the full year is reasonable to expect on the top line?
Gentlemen, I think I will be abstaining from this basically because the situation is very dynamic and we don't want to give any statement which is getting committal or forward-looking or whatever it is, because we are still optimistic and we are assessing the situation. At this time, I don't think I'm going to really talk anything about the numbers for the next year.
Okay, sir. And sir, lastly, sir, our equity capital, sir, it has been constantly expanding almost every year or every 2 years, from 17 crore in FY12 to 28 crore. So, I mean, sir, is there any further equity dilution or whatever had to happen has happened?
2016 onwards, I have not seen any kind of a dilution in numbers very clearly, which is a natural phenomenon when the dilution has happened on account of ESOP, which has been very negligible in terms of point percentage. So as it stands, basically, we have not done it over the last 5 years from 2016, and we don't need any money, we don't need any kind of a thing as it stands. So what will happen future in terms of the business to move forward and what the business strategy is looking like post-COVID, I think we need to take a call at that point of time. As it stands, if it is for operation purposes, whether the company needs to raise money or what, no, we are sitting pretty tight on about 130 crores of cash and generating cash, and we are clear that as a going concern, will be a going concern in the current year, and there will be a good amount of cash flows generated. So absolutely, we don't see any intent for it to get diluted, but for natural ESOPs, which will automatically have, which will be in the minuscule percentage.
And sir, can you explain to a layman, sir, that out of so many IT companies, sir, what is the differentiating factor in Cigniti? Like, what sets you apart and what is your USP basically?
Shikha, please.
So we are an independent quality engineering services company. That is the key differentiation. And when it comes to other IT services companies, most of them focus on everything, but our focus is only on quality engineering and the services around that portion.
Okay, sir. I got that.
Yeah. Sir, and also, sir,
Mr. Garg?
Yes.
So sorry to interrupt. Due to time constraint, we'll have to stop you.
Sure.
Thank you. So, I want to add a point.
Yeah, please, Krishnan.
I want to add a point is that
while you talked about shareholding, I think we have all filed with the exchanges that the promoters have enhanced their equity by buying shares. Yeah.
Yes, much appreciated.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Ladies and gentlemen, I now hand the conference over to Mr. Srikant Chakilam for closing comments.
Thank you, everyone. Thanks for participating in the call. Please, stay safe and stay healthy. I look forward to our next earnings call. Thank you.
Thank you.
Thank you. Ladies and gentlemen, with that, we conclude today's conference.